Hey everyone, in this video I'm going to cover some of the big news coming out of Boeing's latest earnings call, and these are big items that Boeing stock investors are not going to want to miss. So let's get right into this brief video here. Starting with its most recent quarter, management said that 60% of their revenue delivered double-digit profit margins, right? So that's one part of its business that was very profitable. However, the other 40%, made up a number of small, more established programs. Those are experiencing negative profit margins on certain contracts due to supply chains, factory stability, things that they've highlighted previously. So this is a big risk. One of the big risks with Boeing stock is that the company, yes, on the one side, you get transparency because Boeing signs contracts for long-term deals, right? It signs contracts for planes that it's going to take Boeing years and years to deliver fully on that contract. But the risk for that is that it signs a contract for a certain price, and then there's a risk that Boeing may not be able to profit at that price. So let's say it says, okay, this 747 or 787 plane, we're going to sell it to you for, I don't know, $10 million each. And at the time, Boeing feels confident that it can deliver that plane at the $10 million sale price with a considerable profit margin. But things might change over the next couple of years, and Boeing may not be able to deliver that plane at the $10 million sale price with a profit margin. It may now cost Boeing $12 million to make that plane, but it has the contract, it has to deliver it for $10 million sale price. And so there's a risk here, and this is now playing out where Boeing signs contracts at certain prices, and then the costs rise for a variety of reasons, and now Boeing does not end up making the profit it had expected when it initially signed the contract. The good news is that Boeing expects these programs will improve through the course of this year and return to normal margins over time. Now, when I hear management say over time, to me, it's a bit risky. I'd prefer management say, you know what, in the third quarter, this is how much they are going to go up to, and then in the fourth quarter, margins should rebound to this level. So I'd like to see quantified growth projections in terms of the profit margins. When I don't see it, I think of it's more vague, and I think management doesn't really know either because there's still so much volatility in the process. So it just raises that red flag in my mind that okay, this issue is not yet completely solved. Okay, moving on. The company ended the quarter with nearly $15 billion in cash, and their debt balance reduced to $55.4 billion. In the quarter, they paid down $1.7 billion in debt. This is important now. I like when companies are starting to pay down their debt now because the cost of capital is rising. Companies like Boeing were able to borrow at significantly lower interest rates 4, 5, 6 years ago compared to what they can borrow at today because interest rates have risen so much. So now when these debt balances come due, rather than refinancing, I'd prefer companies pay down these debts instead of going back out in the market and borrowing again at very high interest rates. So this is good sign. I like to see this, and this is big news that they're able to pay down 2 billion, which is nearly let's say 3 to 4% of their debt balance. Hopefully they can stay on this path and continue. And I think they will because of these next items I'm going to talk about here, which is that in 2023, their financial outlook is unchanged, and they expect to generate between $3 and $5 billion in free cash flow. So 3 to 5 billion, and that's even though the company is significantly constrained right now. It's not anywhere near full strength, and it's still going to be able to generate, let's say, $4 billion of free cash flow at the midpoint. Another item that's been a big issue for Boeing is passenger traffic, right? Remember, COVID really hampered travel, especially business travel, and that hasn't recovered completely. Management notes that passenger traffic in February increased by 55% year over year, but it's still only at 85% of pre-pandemic levels, and there is no telling if it will ever get back to 100%. Many companies have really reduced business travel. They've said, you know what? Let's do a Zoom meeting instead. It's really expensive to send our corporate staff, you know, halfway around the world for a business meeting. Let's try and do it over Zoom. Yeah, we know it's not as effective and it's not as personal as a face to face meeting, but it's also not as expensive. So many businesses are feeling the cash crunch, haven't yet said, let's return that business travel. But longer term, Boeing is on track to achieve their long-term guidance, which includes $10 billion of free cash flow. So more than double what they expect in 2023. In 2 years from now, 2025 and 2026, Boeing expects to generate $10 billion in free cash flow, which would be huge news for Boeing stock investors if management makes progress and hits that target. I think investors would be very, very happy with that progress there. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.